Knowing the intrinsic value of a company and having the ability to calculate it has been the success of many investors, including Warren Buffett. In this video, we're going over the magic formula of the legendary Benjamin Graham that's used to calculate the intrinsic value of companies. And we're going to use it on two companies step by step. Benjamin Graham is known as the founding father of what's now known as value investing. This is an investment strategy where investors look to add stocks to their portfolio they believe have been undervalued by the stock market. Some of the most known investors in the world make use of this model, including Warren Buffett. Benjamin Graham was the mentor of Warren Buffett. Despite this method being a bit old, as it was published by Graham back in 1973, it is one of the most popular investment strategies out there. Graham also published very popular books like The Intelligent Investor. Just listen to what Warren Buffett has to say about Benjamin Graham.
Ben Graham, he was your primary mentor, model?
He was a wonderful man, and he was my professor at Columbia. I read his book when I was 19 at the University of Nebraska, and The Intelligent Investor. What he did was he got me thinking not as a stock as something with a ticker symbol that wiggles around and that that you look at charts on or anything. He taught me to think about it as part of a business, and that was vital. And he taught me not to really pay any attention to stock market fluctuations except when they were working in my favor, so that not to get elated because something had gone up or depressed because it went down. So if I knew the facts on something and it went down, I bought more of it, and because I looked at it as a business. And then he taught that famous lesson about a margin of safety, that you don't drive a truck that weighs 9,900 pounds across a bridge that says limit 10,000 pounds, because you can't be that sure about it. If you see something like that, you go down a little further down the road and you find one that says limit 20,000 pounds, and that's the one you drive across.
As you can hear, Warren Buffett has learned so much from his mentor and is a big believer of long-term investing. Like Warren said, you need to look at stocks as real businesses and not just some ticker moving around on the stock market. Also, what I loved to hear was about the mentioning of the margin of safety, which I make use of myself when calculating the intrinsic value of a stock and whether to buy in or not. By looking at the fundamentals of the company, you should be able to derive the true value of one company from the current price, called the intrinsic value. In order to calculate this so-called intrinsic value of a company, Graham invented a formula in order to do so. The formula is as follows, where V stands for the intrinsic value of the company, EPS is earnings per share, the 7 stands for the PE ratio of a stock with no growth expectations, and the G being the growth rate for the next 7 to 10 years. 4.4 is the average rate of AAA bonds picked in 1962. The funny thing is, 4.4 is still, to this day, more than 60 years later, very accurate. Why is the current yield on AAA bonds? During the time, the assumptions have changed a lot and the formula has been revised to modern times, so now we make use of a PE ratio of 7 instead of 8.5 and a growth multiplier of 1. I use this formula myself in many of my videos, so make sure to check them out. Let's go over two real-time examples valuating a company. I will also show you exactly where I get my information from. The first stock we're going to take a look at and calculate the intrinsic value of is Nextar Media Group, ticker NXST. Here I have built a model where we plug in the data and it makes the calculations for us. So the constants are 7, 1 and 4.4. The yellow filled parts we need to put our data in. So first off, we need the earnings per share. I like to use Seeking Alpha for this, but you can use any other sites to your liking. We can see that the EPS is 24.95. Next is a projected growth rate. This is based on analysts' expectations and my own research. Let's take 4 in this case. Last thing we need to put in is the current yield on AAA bonds. I like to use the site YCharts, showing you a history. The current yield is 5.16%. So we plug in all the data. After having done all that, we get an intrinsic value of $234.03. So now, if we want to know if Nextar is a good buy or not, we need to use a margin of safety. When we use a margin of 20%, the stock is still a buy, even with a margin of 30%. But we can see it all change when you put a margin in of 35%. Let's use another stock as example, Altria Group, ticker MO. O. The same principles apply, only the yellow fields we need to fill in. For the EPS, again, we go to Seeking Alpha, as we can see the EPS being 5.07. I project a very low growth rate for Altria Group of 4. With the same current AAA bond yield of 5.16, we come to an intrinsic value of $47.56. With the current price of $41, a margin of safety of 10% is acceptable and making Altria a buy. There are some cons to this formula I will quickly go over. First, the formula makes a lot of assumptions, as we can see. Both the EPS and current yield on AAA bonds can vary a lot. Just look at the yields in the midst of 2020. The yield was only 1.4. When we plug that into the formula, the value of Altria changes a lot to $175. Second, there's a lot more metrics you need to take into account before deciding to buy a stock, like assets, debt, growth in key financials like revenue, EBITDA, free cash flow, and many others. Same goes for qualitative factors like the quality of management and
Competitive advantage.
that this formula doesn't take into account. And third, you shouldn't rely too much on the formula, but rather use it as an indication and one of the many tools you can use in order to decide to buy a certain stock or not. So that's a brief explanation of the Benjamin Graham formula so many investors use. If you want to see this formula and lots more valuation models being used to calculate the intrinsic value of a lot more stocks on the stock market, make sure to subscribe to the channel and make sure to not miss any future videos. For now, thank you so much for watching and I hope to see you in the next video.